Welcome to my podcast where I talk about all things related to money mindset, finance, business, and investing. My name is Royston Camberbatch, a qualified accountant with over 30 years experience in finance and business. Coming from a very humble background, I have continuously challenged the assumptions and the expectations of what I'm capable of achieving for myself and others. Over the years, I've helped hundreds of entrepreneurs to decipher finance and to make more money and to run highly successful businesses. On this podcast, I will share with you tips, strategies, techniques, and tools that you can use to make more money, manage money better, and to maximize your success. Welcome back to the podcast, and in today's session I want to talk to you about something that I've been thinking about because a few people have been asking me, for example, about is the price right, and they're trying to figure out, okay, maybe the products and services that they're offering, they could either charge more or they're probably thinking they're charging high and they're not getting sales. And look, so today I want to talk about you with price versus value. And for me, price is what you pay and the value is what you get. So if you're a business owner, you're a service provider, ultimately the price that you charge has to be dependent on the value that you're giving to people. But what's really fundamental here is not the value that you think you're giving, it's based on the perceived value. So that's why when you're looking to do business, when you're looking to price your products and services, you have to do something called market intelligence and customer intelligence and try to understand exactly what does the customer want in terms of what does customer need, and then you have to say, well, okay, based on what they need, are you actually relieving a pain or are you increasing a gain? But if you're really doing that, then obviously you can charge a premium price, especially if you are the only person doing that, and if what you have is completely really valuable for the customer, then the customer is going to be willing to pay you, right? Because ultimately it's how you make the customer feel. For example, if you take vehicles, for example, like a car, right? You just kind of common sense. Person doesn't need a Bentley per se, or they don't need to to buy, a brand new Range Rover sport car, right? It's how they feel. People don't necessarily buy what they need, they buy what they want, and they buy it based on how they feel. So I think as a business owner, you can't be too logical. You can't be too okay, well, I paid X amount for it, and because of that, I'm gonna just do a cost plus pricing. I want to mark up 30% and do that. I think no, fundamentally, I think you have to really evaluate exactly how valuable your thing is. Are you operating in a niche? Are you in an area where, for example, it's very competitive? For example, there are marketing strategies. They say, okay, well, I know exactly how much it costs me. I'm not going to sell it at a loss, but actually you might sell it at a loss. Well, let's take the case where you said, I'm not going to sell it at a loss, but you must know the price at which you can sell it so that you just cover all your operational expenses. That's why we call it financial intelligence mindset. You have to understand the numbers behind your business in this particular case, understand exactly how much it costs you, understand what is called the cost per unit, and then right, based on that, you can charge a price and not even lose anything. So if someone trying to negotiate with you, you can then even try to say, okay, yes, I can take that particular price, but even if it is discounted by 25%, that your markup was 40%, so you still don't actually lose any money. That's why I always say to people, you must know the numbers behind your business. You can't just be going to business and just doing guesswork. It's some very basic things that you must really know. So, and then there's also something called price elasticity of demand. I'm going to be technical now. So what does price elasticity of demand says? Well, it says that when supply is equal to demand, then you meet the equilibrium point. So basically, if you have goods and services and, for example, your supply is greater than the demand, ultimately you might have to drop the price, right? Because your goods will just stay on hand. However, if your supply is smaller than the demand, for example, if more people are ordering your stuff than you actually can sell it for, you can then probably charge a little premium price, kind of slow down the demand, right? So I'm just dropping some gems here for you around price versus value, because for me that's really fundamental. Because one of the things is that, for example, as a consultant or a coach, it's how do you price your service? Are you going to price your service based on hours, or are you going to price your service based on the perceived value? Because I don't think charging by the hour really makes sense. For example, me, I've got over 30 years experience in business and finance, right? I've worked for small companies, I've worked for hotels, I've worked for bakeries, I've worked for retail business, I've taught over 500 people business and accounting, I've I've traveled over 50 countries, which obviously in itself increases my understanding of how business really work. I work for some big financial services companies. Altogether, I got all this experience. I got an MBA, So now if I'm gonna work with someone to help them grow their business, right? I myself have actually grown businesses as well. I need to charge them for my experience. And also is what it's worth to them, But more importantly, when they're paid, it needs to be value for money, right? Because people want value for money. But how do you put a value on something like consultancy services? What I say is all based on what is that thing worth to them. When you give them the breakthrough of how they can then go and say grow their business, or you give them the breakthrough of how they can solve a problem, that must be worth something to them, right? So it's value for money. You are giving the value and they're giving you the money. It's just a different way of looking at value for money, right? And then there's something called the value chain. When the value chain on all those activities from end to end, which actually bring the product or service to the customer. But what you have to do in business is that each level, each activity should be an added value activity, So therefore, by the time you get to the end, it's just packed with value, Whether it's the customer service, the quality of the goods, efficiency of the processes, whatever it is, And this is just touching the surface, right? Because they're actually marketing strategies. There are strategies that you can really use to say, like, let me penetrate the market. Even though I know that this thing is worth more than I can get for it, let me do something called like a loss leader. A loss leader is where you put something quite cheap, quite lower than you expected to sell it, and you bring people in, you bring them in, and then hopefully they buy other products and services. So I'm just saying, man, there's so much strategies. Pricing, there's also pricing psychology as well. Well, how exactly do you price it? When I say price, I mean what numbers you put on it, how you write the price. Pricing is so important. Why is price so important? Because in order to make money in business, you must be selling something. And when you sell something at a particular price, that gives you the revenue. Quantity times price equal revenue. So the price is really something that really influences the top line. But what I want to say associated with the price is also called the margin and the markup. Most people in business don't know how to calculate margin. And most people in business don't know what the margin on their products and services are. And they don't even know what's called the cost of goods sold. So how much is it costing them to actually bring this to the market? And this is a really key metric. So what exactly is the margin? Well, the margin basically is the difference between the sale price and the cost price as a percentage of the sales price. Whereby the markup is obviously the same kind of number, but basically on top of cost. Rather than a top of sales price. So margin and markup can really tell you and help you to inform whether or not how much adjustment you can make in the price before you actually start losing money. You know what I mean? So it's very, very fundamental. It's not just like, bam, here's the price. And you have to understand if you change the price by X amount, you should, as a business owner, should know how much is that change in price going to impact your profitability. How much is that price going to really hurt your bottom line? If you do a marketing strategy where, for example, you have a higher goods turnover in terms of, okay, you lower the price, but you're going to have a whole turnover of all the goods in a shorter space of time. Therefore, your money start to flow, right? Because that's where I really like. When the money start to flow, that means you can reuse the money. Because your cash conversion cycle. Your cash conversion cycle is how fast can you actually convert, say, goods and services into sales and then back into cash. But even though you make the sale, you may actually collect the cash, right? So that's called a cash conversion cycle. And obviously, working capital management is the next fundamental thing here, but all depends on some of your pricing strategies can really determine on whether or not customers buy for you. Of course, linked to that is obviously your marketing strategies. How well are you marketing the services? How your positioning in the marketplace, your segmentation in terms of are you going after a niche? There's a number of facets, but I just thought I'd just drop some gems here for you quickly, and I hope this quite makes sense. By the way, for those of you who listen to the podcast, because I actually did some statistics and I read that the podcast is being listened in different places, potentially in America as well as in Ghana. My name is Royston Cumberbatch. I'm a qualified accountant with over 20 years experience in financial services. I really understand how money really works. Reach out to me if you need any help with money management, you need any help with understanding, the numbers behind your business. That's me. But other than that, I just want to say whatever you're doing, just keep it real. If you're struggling to get the price right, then obviously something is wrong, because price is really part of marketing strategy. Pricing is kind of also part of what is called buyer psychology. So there are a number of things, in business. It's not just bam, let me do a good service and let me just sell it at this price and I'm not going to flex it. You have to really consider and understand consumer behavior, understand competition, understand, okay, if I just tweak it by $50 or 50p, whatever the price, depending on the price point, how will that impact my bottom line? So a number of things you already consider. So with that in mind, I'm going to leave you here for now because I'm just doing some quick short videos, but on and audio as well. I'm going to be sharing lots of audios and lots of videos as well. I've just hired like a marketing strategist, content marketer, expert. So lots of stuff will be coming out. So stay tuned. If you like the podcast, if you've been listening for a while and you liked it, please follow, please share it, because that's only how it's going to get popular, right? So I just going to give a bit of an impromptu one today. But yeah, other than that, some of the future ones will be structured. I've got a whole list of things to cover from asset protection, risk management, how to choose your insurance products. Some of it is like personal finance, but it's obviously in business as well. Strategies around taxation as well, and one of the big strategies that you can use to save tax in your business. But let's face it, tax is one of the biggest expenses. So I'll be giving you some gems as well as we keep going. So if you like the podcast, follow it, share it, comment on it, tell people about it, and let's keep the vibes going. In the meantime, look after yourself, take care, be good. I'm tapping out. Bye-bye. Thank you very much for listening to my podcast. I hope you enjoyed the show. You can find out more about me by Googling my name, Royston Cumberbatch. I'm on all the social media, Facebook, Instagram, and LinkedIn. You can find me on YouTube as Roy Cumberbatch. And if you are listening on YouTube, please hit that subscribe button, or you can find me on my website at www.racmacs.com. That's RACMACS.com. It'd be great to hear from you. And do feel free to tell me about any topics you want me to cover on future episodes. Until next time, be good to yourself and others, keep positive, and reaching for your financial goals. Bye-bye.